Hello, everyone. Welcome to the Professional Insight Podcast. Season 2, episode 32, Trev?
32.
Yeah, I'm Brandon Curry.
I'm Jeff Collins.
I'm Josh Bond.
I'm Trevor Lindy.
And we have the amazing Jacqueline, which is not on camera. She doesn't want to be on camera. I don't know why. Anyway, we've always said that it
Doesn't want to associate.
Well, I
Boost their
don't
ratings.
blame her. I mean, it'd make the podcast look a lot better than us four ugly
And now
mugs.
that we've got Leonard Cohen over here,
Yeah.
smooth
yeah.
sounds.
So
it
when we're recording this right now on February something?
March 4th,
March 4th.
2020.
So we are in the
February
midst of a pandemic.
No, we're not a pandemic.
Oh yeah, there's all kinds of rumors. Costco's selling out. There's no
Okay.
Purell. There's
Oh,
no.
God. Okay.
I was at Deluxe.
No face masks.
No face masks at the paint stores.
Anyway.
This is great. This episode's going to be no face mask, no Purell.
Yeah, so
Pandemic.
anyways,
that's it.
so we're in the middle of why we're talking about this, which is a stock. There's a stock sell-off right now. Actually, as of right now, the stock markets are actually up today. We just got news yesterday, that the Fed cut interest rates by 50 basis points.
Yeah,
Right.
U.S.
Follow the
US,
Yanks.
and
Yeah.
then the Bank of Canada just right now. This is breaking news, but you're going to get it 6 weeks later. Breaking news 6 weeks later.
4 weeks late.
Yeah,
4 weeks later, breaking
you're gonna
news.
get it. Breaking news. Bank of Canada just cut their interest rates by 50 basis points.
That's
No,
hard.
when's the last time they cut it by 50 basis
50?
points? Yeah.
I don't remember.
I
The
don't
last time,
Probably-
50 basis points, they
08,
moved.
09?
No, they remember.
Maybe.
So 8 was when the drops started happening.
Right.
End of it,
And
right?
then they tried raising them. I want to say it was like 2012.
They did, that's
They
right.
tried raising them,
Around
but
that
as
time.
quick as they raised it up, I think they went up like quarter, and dropped by half, or went up by half, and then the next meeting they dropped by
So a
half.
couple
They
people-
dropped
So
it.
I-
They dropped it in 2015 because we had the oil.
Was it? I remember it being like early to mid, 2010s.
Yeah.
So
in
for the
there
layman listener, what is
50,
that?
50 basis points is a big deal.
Yeah, but
because
for the
typically-
layman listener, what
Just-
impact
just-
does that
Okay,
does that
so
have?
all right. So what that means? So first, right off the hopper, borrowing becomes cheaper.
Yeah.
So if you are currently in the market right now and you are invested in bonds, that means
Like
that
me, like Josh Bonds.
Yeah, not Josh Bond,
Okay.
no, just bonds, right, in the bond market. The bond market is 10 times larger than the stock market. Okay, so if you want actually a clear indication of how the economy is actually going, you want to look at the bond market. It's very boring, but you want to look at the bond
Like
market.
long-term bonds,
Yeah, 10-year, 2-year yield.
treasury notes.
Yeah, that's right. Government. And so if you're currently in and you've invested in bonds, and basically the bond prices have decreased, or the interest rates have decreased, that means you are getting
Less return on your investment on the bond.
that means if you then now invest into the bond market, you're getting less of a return because money's cheaper, right?
Yeah.
So, but if you have already been in the bond market, and let's just use a hypothetical situation, you bought a 10-year Treasury bill
Yep.
from the Canadian government.
Kind of
and-
similar to a GIC.
Yeah, it's the
The government equivalent.
It's the government equivalent of a GIC. They'll pay you back in 10 years, right? And then they have a yield rate on there. And let's say that yield rate's 1.59%. Okay? So that 1.59% would now be on the market 1.005% because they've cut it by 50 basis points.
Gotcha.
Okay? I'm using simple
Yep,
solutions
yep.
here. So that means that the person who has the 10-year Treasury bill
At
at
1.5.
1.59%, that bond is worth more now. People will pay more for that because they're getting a higher yield than on the open market. So
Because it'll carry that
bond
extra
price-
0.5% for however
Right.
amount of time left
right,
in
you
the
can
term.
sell you can sell the coupon
Yep.
and get your money back, right? So bond prices work inverse to interest rates. As interest rates go down, bond prices go up. Older bond prices go up.
Okay.
Right? And conversely, it's
That's because they're dropping the interest rate on the bonds.
right, because money's cheaper. So a government or even a corporation, why would I go and lend money at 1.59% when I can lend money at 1.05%,
Sure.
right? And it's the same goes for now mortgages are going to get cheaper. So in theory, what you should be seeing in the next couple days or so, you're going to see
We've actually already started. The
Start-
bond yields have already started dropping
Correct.
prior to the announcement.
Correct.
Actually, the bond yields started dropping because of the Fed announcement.
Sure.
correct.
The American.
The American
Yeah.
Fed announcement. Because of that happening, we've seen bond yields in Canada dropping.
Right.
So we've already started to see relief on the fixed rates, which is what drives.
So from your point of view, if you got someone closing Friday, are they scrambling to call you to see if they can get reapproved?
If it's
'Cause if you're
closing
about
on
to
Fri-
lock in at something higher, and you're like, oh, they just dropped.
The
Some
only-
products will adjust their interest rate up till close.
a lot of lenders now require you to ask. They just don't want to give it to.
right.
They're not giving away the farm anymore. They leave that up to the broker. They leave that up to the client to come in and ask for that discounted rate. If it's something's closing on Friday, you're not going anywhere. You're sticking with that lender and asking that lender for
right.
as best a price discount that you can get with the new changes.
So for a layman's
And
person,
some aren't even changing though, too.
so
right?
for a layman's person, this is a couple good things, right? So your GIC prices are going to come down, right? Your bond prices are going to be coming down, or your yields on your bonds are going to be coming down. So new mortgage rules are coming into effect in April 1st in the new budget.
April 6th.
April 6th.
Which we'll talk about on another episode.
Which is like
So-
tomorrow when this.
Yeah. So basically, so on
Might-
April 6th,
might already happened.
Right, yeah. So, which means that they'll be changing the rules on that, which means that if your lower 5-year fixed drops by 50 basis points or drops in general, you could potentially buy more house because you can be approved more because the rules are changing.
Yeah, well, it'll create a little bit of flexibility for the first-time buyers and stuff that
100%.
new into the market, right? Which has been a struggle for the last couple of years.
So, this is
I don't know how much that helps it though, really, but it's just it's so competitive that first time buyer price range.
Yeah, but
It gives you a little
if
bit of
they
breathing
can
room.
qualify for. I think there's two things coming in terms of the stress test
stress
is
going
changing
down
a
a
little
stress
little
bit.
test is
bit,
changing, but we'll
like
get
a
that
little
on
bit.
another
Yeah.
episode. But
Yeah.
And you're
next
able to get a little bit more house, so you not drastically, Jeff,
So the
but
competition level goes up just a little
Yeah.
bit.
You know
what?
So now it's up to
Between-
350,
yes,
375.
so people ask more for the house, right?
So this is going to come out just after a couple weeks
So
after
this
March
would have
break.
been great
this,
advice for you 4 weeks.
this one, yeah,
It's-
right.
we
but
didn't have the
We have
coronavirus
to do
for
this
as well.
live. That's what we have to do in season 3.
At this point in time, when you're listening to this, coronavirus is a thing of the past.
Well,
if it's Trump, it's warmed up enough. It's gone. It's obliterated.
yeah.
Obliterated.
Fizzled
so
out.
I mean,
Fizzled out. It's done.
Listen, it's going to run its course. The markets are going to get routed, and they're getting routed right now. But it's a great time to buy. It's a great time to buy stock. Get
Now,
out
do
of
you
the.
wait a little bit to see if it tanks a bit more?
We've said this on the episodes before. You can't time the market.
Never.
Yeah.
Right. So classic example. So we're like I said, this is March 4th right now. So on March 2nd,
It was a big gain.
It was a big gain, and then Fed cut interest rates the following day on March 3rd, and the markets
Another drop, almost
dropped.
the exact same.
So you
went
can't
from 12,
you
went
can't
up
time
1,200 points.
you can't
then
time
it
the
dropped
market,
another 900.
and then they're up again today.
So see, that's why it's difficult for somebody like me who I'm waiting for a cash injection.
Yeah.
Right. I'm waiting for a drop, but when this starts happening, then I get concerned that I'm trying to time the market. Right. So I'm going to take X amount of dollars and put it in today, and while SOB tomorrow it jumps 1,000 points.
It won't. Well, no, I mean that'd be astronomical.
But
I mean,
do you know what I
I know what
mean?
you mean. So you can't.
Or-
so, I mean, at
or-
the end of the day, I'm telling you that this. If you looked at the 10-year average, we're not even close to 2015 levels when the stock market crashed in 2015. So not crash, but like
It
went
wasn't
down.
much of a crash. Of
No,
15,
but it went down significantly.
Yeah.
Right. And so in 2015, we're not even at those levels. So we have you have a long way to bottom out before anyone
But
gets
from the
concerned.
layman's terms, you're saying all this is dropping because of COVID-19.
Yes. Yes.
the bulk of it, because
That's-
the impact that it's having on the Asian markets.
Well, the factors are shut.
So here's
Right?
the example. So back in 2003, we all remember SARS.
Hmm.
So SARS was mainly a
concept.
North American impact. But at that point in time, it did impact Asia. However, China, as they say, produced cheap shirts and products. Right? They weren't the manufacturers that they are now,
Yeah,
the economic
powerhouse they are,
powerhouse that they are now. So now go ahead 20 years, almost 17 years. You have Canada, it was an export economy, and you have the States, which is basically a consumer-based economy. So Canada's getting the crap kicked out of it. We can't get our oil out. We can't get it across rail because of right now, as of March 4th, the blockades have just come down, right? You've got you got car parts that can't come from China. You got manufacturers that can't get car parts. You got iPhone that can't get iPhones.
Well, they're a huge manufacturer,
right?
right?
Like they're huge.
So
So
iPhone's over finally.
finally, so
All tech in general, like things like the camera that's in your phone. Doesn't matter if it's a Google phone, Samsung phone, BlackBerry. They're all coming from the same sources, right? So that's actually there's supply chain constraints on parts to go into the manufacturing of the iPhone, the Samsung.
So when you look
like
at
the tool and
investing,
die for the automotive industry.
right? So
Yeah.
So manufacturing's paused basically.
it's
so
all
the market's
paused.
dropping.
So when you look at
a big
when you
pause.
look at investing, you look at the guts of the company, and this is why I'm not worried, because yes, it's a dive. Yes, it sucks if you're just on the verge of retiring. I will acknowledge that, but
Hold off if you are.
Yeah, wait
but the,
another
but
year.
the problem
Wait
is
a
that
year.
Not even a year. It should correct itself in 6 months.
yeah, it's going to be tough for the next 3 to 6 months. But with the Fed and what the Bank of Canada are doing is they're using monetary policy to help stimulate the economy, and this will stimulate the economy, because when you look at the guts of an actual company, nothing's changed, right? In 2008, companies failed. They went bankrupt because they were on a house of cards. That's not the case right now. So you got airlines dropping, you got cruise ships dropping, you got travel agencies dropping. All people are going to travel, people are going to back flying, people are going to go back taking
But
cruises.
this is under the assumption that everything with COVID-19 is gonna be the same as SARS path. So we're just assuming, like everyone's talking right now, 3 months it's gone and it's all bad.
Yeah, but so
But
That was
what
a
if
very
it
different
escalates
time.
even further right now? We don't know that. So it's under
it
the
doesn't matter. It's
assumption
okay, and they
It's
say
gonna follow the same path as SARS, right? That's the
yeah,
assumption
well,
each kind of doing.
yeah,
right?
look at Ebola. There was an Ebola outbreak
loosely.
2 years ago.
I mean,
so,
it's a big scare right now because we don't know anything about it.
right.
We know limited information about it. We don't know.
We have no idea if it's
And
just
part
the
of-
start or if it's near the end. We
Correct.
have no
Like
idea.
to compare the two, though, we don't know if because the warmer weather caused the demise of SARS, right? That's what started the drop. We don't know if
starting to sound like
coronavirus
Trump
or
now.
COVID. Well, this is where he's coming from when he's
of course.
making. Well, this is where his
Yes.
advisors are coming from and giving him his talking points and all that sort of stuff.
Which I mean, listen. In reality, certain things do have difficulty, obviously.
Yeah.
Surviving in
Yeah,
in
I'm
warmer
not saying
climates, but-
COVID-19 is going to drop off the way SARS does, but you just have to be careful in how you
Sure.
word it.
Yeah. So I mean, in all intents purposes, this is pretty easy. I'm not too worried. I'm just looking at it right now. Just people are pretty pumped, and they're commenting basically that it's starting to get cheaper to buy and to lend money, right?
But
So-
see here, the difficulty with how low does this thing go now? Right? Because we've had low rates for a solid 10 years now.
So you know what's funny that you bring that up, and I'm glad you. Okay, this is a great segue. What time? How much time are we at right now?
I don't know. Ask Jacqueline.
Jacqueline, how much time do we have right now?
We're at 13, so.
Okay then.
Okay, perfect.
But
See-
we shouldn't,
No, no,
depending
no,
on how much
this-
you got, we
no, this-
maybe close this one off. and
Well,
get
we
on
can
to
go
another
no more
one.
than 20 minutes. We'll go for another 5 or
Okay,
6
I
minutes.
just don't know how much you got.
Okay, so actually, when you look at historical interest rates, okay, and you go back all the way to like 1950, 1940, okay, interest rates were never really above in Canada. Were never really above 3% until the 80s. So you actually only have a 15-year bubble essentially from the mid 80s till about 2001, 2003, and then around there. Call it even 20 from an 85 to basically 2005.
Let's say
Where-
let's say 2005 because I bought my first place in 05, and at that point in time the interest rate was 5.7.
Right.
Bank paid the down for me.
Right.
So it was a little bit of a different, but I mean even your interest rates were
And-
still in the mid fours.
It actually climbed higher than that when the bank.
Afterwards?
Yeah, like 2008 when I got into this business,
Yeah.
for the bank to pay the down, you were hovering in the sevens.
Okay.
I was at CIBC at that time,
Yeah.
so if we paid the down for anybody, you were taking a 5-year fixed at 7.2.
See, and what were average house prices then? Like 180, 200?
This was Timmins, right? So I mean,
Oh, yeah.
Oh,
so
the
that's way
so
different there, too,
nationally, yeah. Nationally,
15 years
250.
ago,
I don't even think that high. 'Cause
Nationally,
right now, we're looking
including
at
Toronto, Vancouver, Montreal. Yeah,
450, 500 right now?
yeah. So it was about 250.
I think it was less. I think it was less than that.
I remember buying, but I
bet
mean, I
you
bought
like
in
150 to
2000.
200 around there.
I bought October
for
2008.
Timmins, we paid $240,000 for
You get the
a
pigs and chickens with it.
2,300 square foot all brick house.
Yeah.
That was
Is that a two-story bungalow?
2-story.
Yeah.
That was
Lean into your mic.
that
it's
was
there we
sorry, maybe 20 years old,
Yeah.
Right.
20 and change.
So how much
So-
is that?
Yeah.
240.
240?
So I guess when you look at it, actually we're at you know historical without taking out that 20-year little blip in the 80s where there really wasn't any fiscal or monetary policy. There was a huge supply and demand problem with the boomers coming
Yeah.
in buying houses in the late 80s.
Yeah.
So they never had fiscal and monetary policy, specifically monetary policy of cutting interest rates or raising interest rates in order to manage. That was just supply and demand that drove it up. So when you
Markets
say,
took care of themselves, right?
well, but now we've got strong fiscal and monetary policy on both sides of the aisle for government that actually help inject and help regulate the markets. So technically speaking, taking out that 20-year bubble, we're actually normal. Like you don't see interest rates over 3%, historically leading 40 years before that
In my lifetime, the cheapest that I've seen the interest rates are,
right now.
well, I don't know yet right now because I'm not sure the effect that it's going to have on it, but
Well, they-
was about maybe
2008.
around 2.5%.
Yeah, I think
right?
two to
Between
two.
2008, 2015, I would say. Like
Yep.
I remember becoming a broker. Or what was
I
that?
remember
And
under twos and sub twos.
See, I haven't
well,
seen sub
if you
two.
were in a variable rate,
Variable,
for
if
sure.
you were in a
I'm
variable,
talking
you were
5-year
sub
fixed.
two.
Yeah.
5-year
Right?
Yeah, but
fixed.
variables were under
Sure,
two.
100%.
5-year fixed. I got my broker license September, October 2015, and I was doing deals for clients in spring of 2016, 234s.
I remember
we go.
195 variables and all that.
Yeah, so
For
this
variable,
is-
yeah, but
This is
fixed
actually,
rates, we were in
if
the
you take historically, this is where
I remember
they
that
typically
rate.
are.
234.
yeah, and I think we're right now. Alterna Bank, credit union out of Ottawa, just got an announcement yesterday. 249 quick close, 5-year fixed insured, so less than 20% down.
Wow.
249
Wow.
already before this announcement.
So now-
from Bank of Canada.
This is a personal question for Josh, right? I'm
You talking to yourself in first person?
Gonna say
For
my
me.
son's been doing that.
He's gonna ask himself a
but I
question.
mean, my rate, my term expires in a year.
Yes.
Pay it off.
But now, should somebody like myself be looking at a blend and extend or a new mortgage product?
And that was
There's a lot
you,
of
you
things.
and I were having that
Yeah,
personal
100%. I just
conversation the
figured I'd
other
put
day.
it on the-
And you know the whole comment that I made to you is where your rate is sitting right now, because you're
264.
you're in that mix of the mid twos, unless we start to see a significant drop, and we've got to do a comparison between what you're looking at a penalty, because at the end of the day, whatever that dollar amount is for your penalty, even if we do a blend and extend, that gets that penalty 10,000, 3,000, whatever it is,
Yep.
gets converted to an interest rate. So although let's say it drops to 2, but your penalty maybe is 12,000, that difference in interest rate might put you at a 2.5, a 264. It might keep you where you
Yeah,
are.
it might be a
the only advantage
Zero
you'd be,
net gain.
yeah, the only advantage you'd be buying for yourself is 4 additional years than what you have right now. If it was a 5-year that we were
Who knows where it goes?
we were
a
doing
year
that
from
for.
now,
Well,
too,
that's
right?
And that's the
How-
trouble, right? And my comment I always make, if I had the crystal ball, I'd be retired,
Sure.
right? So
Would
I
you or would you
don't
still
know.
work?
I'd work.
well, you know what I mean, though, right? Like,
100%.
Well, if
I
you
don't know
deal
how
with
to.
Brandon Curry of Sierra Smith Financial, you'd be retired by now. That's right.
There we go.
By now, right? Why
What
aren't
time
you
are we at?
retired then?
I love my job. For 20 minutes. Okay, then we should wrap it up. I think they're bored and listening to us. Thanks very much, everyone, for listening to us. Please share and care, and thank you to our sponsors, Brand
Wash your
Boulevard.
hands.
Wash your hands.
Wear a mask if you can find them.
And
Wear a helmet.
yeah, that's
Wear a
it.
helmet.
Help us, help you stay informed.
Thanks.
Out.